Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with EURUSD as usual. Let's discuss the trading plan with Miroslav Bavulski. Yesterday's statement by Federal Reserve officials that recent labor market and inflation data support a wait-and-see stance on rates and no rate cuts for now led to a strengthening of the US dollar. Today, in the first half of the day, we await Germany's CPI and Italy's CPI. These data are expected to match economists' forecast and therefore not provide substantial support for the euro. If the pair continues to fall after the reports, buyers' hope will shift to the nearest support level at 1.1595, which serves as the weekly low. Only the formation of a false breakout there will provide an entry point for counter-trend long positions with a target of small recovery to 1.1624. A breakout and retest of the range would confirm the correct action to buy the euro, aiming for a larger push to 1.1649, which would halt the bear market development. The most distant target will be the high at 1.1676, where you could take a profit. If EURUSD falls, and there's no activity around 1595. Pressure on the pair will increase significantly and could lead to a larger downward move. In that case, bears will try to reach the next interesting level at 1.1558. Only a false breakout there will be an appropriate condition to buy the euro. Opening longs immediately on a bounce will be from 1.1527 with a target of an intraday upward correction of 30-35 pips. Sellers continue to control the market. If inflation prints exceed expectations, the euro might rise slightly. In that case, we expect the bears to appear near the resistance at 1.1624. The formation of a false breakout there will provide an entry into short positions, targeting a move to support at 1.1595. A breakout and a consolidation below this range, plus a reverse test from below to above, will be an additional scenario to open shorts toward 1.1558, which would strengthen the bear market. The farthest target will be 1.1527 area, where you could take profit. If EURUSD moves up and bears are inactive around 1624, where moving averages run and favor the sellers, buyers will get a good opportunity for a larger recovery. In that case, short positions are best postponed until the larger level at 1.1649. Sell there only after a failed consolidation. You could plan to open shorts immediately on the rebound from 1.1676, targeted at 30-35 pip downward correction. And now it's time for GBPUSD. Let's discuss it with Paolo Greco. The average volatility of the GBPUSD pair over the last 5 trading days is 71 pips. For the pound-dollar pair, this value is medium. On Friday, January 16, we expect movement within the range bounded by levels 1.3313 and 34.55. The higher linear regression channel has turned upward. indicating trend recovery. The CPI technical indicator entered the oversold area 6 times over the recent months and formed many bullish divergences, which repeatedly warned traders of a continuation of the uptrend. The GBPUSD pair is attempting to resume the 2025 uptrend, and its long-term outlook has not changed. Donald Trump's policies will continue to put pressure on the US economy, so we do not expect the US currency to strengthen. Thus, long positions with targets at 1.3550 and 36.72 remain relevant now in the near term while the price stays above the moving average line. It's a sign line on the graphic. A price below the moving average line allows considering small shorts with a target of 1.3313 only on pure technical grounds. From time to time, the US currency shows corrections in the global sense, but for a trend to strengthen, it needs global positive factors. That's all for today. See you online soon.